are relatively solid and show, I think, great resilience. If you look at the split of our business, we have a services business that's about 80% of our business and revenue mix, and we've got a technology solutions business that is 20% of our mix. Within technology solutions, we have a value-added reseller business that is very seasonal, and so much of that business is discharged in the second half of the fiscal year. We undertake a series of renewals for many of our customers, particularly in the United States. So that seasonality typically sees about 40% of the business delivered in H1, 60% in H2, and so the numbers, the decline that we saw sequentially is very much in terms of what we've seen in the last 20 years, and was very much in line with expectations. As far as services are concerned, what's encouraging for us is that the first quarter was the last quarter of the transition that we've seen at Vinfast. You might remember that we've completed the development of 2 electric SUVs for Vinfast. And this time last year, Vinfast was our largest customer. And so what's encouraging for us is that we backfilled that revenue, and we now have a solid baseline from which we can drive consistent quarter-on-quarter growth for the rest of this fiscal year.
Sure, sir, but talking about the services segment, which accounts for almost 80% of your revenue, saw a quarter-on-quarter decline. So do you attribute this to the global EV slowdown, is it?
No, we attribute it to the fact that we've seen runoff of the business, the revenue that we've done at Vinfast. We've also seen a couple of large projects who were slated to kick off in the first quarter. We didn't see those projects get started until the end of the quarter. So that's impacted a little bit of the softness that you've seen, but predominantly the sequential decline was driven by the completion of the runoff at Vinfast.
Sure, sir. But sir, let me move on to talking about the MOU which you have signed with your arm to develop the automotive software solution. So what kind of margin impact, any kind of margin dilution from this kind of deal do you see, number one? And also about the hiring, since this is a big one, what kind of hiring do you see going ahead related to this kind of deal?
Well, if you look at what we're focused on through the partnership that we've established with Arm, it's really providing solutions to the software-defined vehicle and product requirements of our customers. You know, as the mobility industry pivots from its dependent upon internal combustion engines to electrification, connected, autonomous, and shared. Software is increasingly defining the competitive position of those vehicles or of those products, and you know, no one company owns the entire technology stack that will deliver software-defined solutions for the customers that we work with, and so we're having to build an ecosystem of partnerships and alliances that allow us to configure solutions for the specific requirements of our customers. We've been very, very pleased with the relationship that we've established with Arm. They are clearly going to be a key player, not just in automotive, but again in the entire mobility sector. And we're very excited about the growth opportunities that represents. And we certainly don't see any margin deterioration with regard to the revenue that we drive through that relationship.
So, sir, do you expect this revenue growth to improve in the coming quarter? Is it, Mr. Harris?
Well, we certainly expect now for the rest of the year, now that we're through the transition at Vinfast, we certainly expect sequential quarter-on-quarter growth. Our order book is strong. The pipeline continues to give us confidence that we can really kick on from here and drive the type of growth that's expected of this sector, and is consistent with the macro demand that is clearly in and around the sectors that we are we are focused upon. So, we are cautiously optimistic about short, medium, and long term.